Bitcoin from a market structure has been incredibly bullish. The pattern now, the chart pattern looks very similar to a smaller version of the one from March to June 2020, where it exploded. We've had this lovely corrective phase. We see all the on-chain stuff, William Clemente, and Willy Woo and all those guys showing that it's all going into good, strong hands. We had the China FUD. We've had a bunch of FUD. This usually, and there's no guarantees, usually October, November, December is ridiculously good, particularly at this point in the halving cycle. So structurally, it looks amazing. So, okay, who are the buyers here? So most people who got into crypto came in via Bitcoin. That's always the case. It's the big daddy asset. And then people move out the risk curve, and that's pretty normal. So who's the next big buyer of Bitcoin? It's pretty clear to me who they are. It is the ongoing institutions. I mean, that just keeps going. And I think we'll see an acceleration in that, particularly if the price breaks out, because everybody's like sheep. They always want to follow each other. Secondly, it is the coming ETF. It's definitely going to, well, definitely, I don't know that, but I just have a very strong feeling it comes in the next, over this October, November, December period. And that will drive a huge amount of money in the space because it allows RIAs to allocate and ordinary individuals in a way that they can easily understand. And finally, we're starting to see noise from the sovereign wealth funds. So I know some of them, and I've talked about this before with you, is some of them already allocated, but I think we're going to start to see more sovereign wealth activity in the space. So Ethereum, again, the charts look absolutely astonishing. The on-chain activity, the adoption is by far the largest of anything in the space. So it's huge what's going on. The move towards ETH 2.0 means that, at a simple level, everybody's going to stake everything they've got to get it there. That takes all the coins off the market. There's about 11% of all ETH in circulation. So it's almost unbuyable. So you bring a whale into the market, the price just explodes. So I've never really seen a setup as good as this in that respect. So I think it's a very high quality bet for the time being because of all of this stuff that's either off exchange, being staked, and there's no free supply and demand keeps going exponential. Well, what's interesting is we're starting to see institutional adoption. So I spoke at Cowen's big event, and it wasn't about Bitcoin. It was solely about Ethereum, which took me by surprise. That's the first one I've done. It's kind of been referenced in other ones, but here I am now speaking to investment banks when they're asking me to come and talk about Ethereum and just skipping Bitcoin, saying, well, we assume you know Bitcoin, but here's another opportunity. So I think there's a lot more adoption to come in that space, and I think there's going to be an ETF there too. And again, with this really restricted supply that's going on because of ETH 2.0, I think it drives prices a lot. I think there are some that are skipping over Bitcoin because they get their head around it in a different way, because they think of it as a way of playing the entire technology of the space. So then they don't, it's hard for many of these institutions to stomach the narrative, the Bitcoin narrative of a store of value that central banks are destroying the world and a lot of this stuff, because that kind of goes against a bit of their business model. But Ethereum doesn't feel like it's attacking them as much, because it's like, here's a space and we're building decentralized finance on it, and everybody can participate. It doesn't feel that they have to change their internal narratives. So some are finding it just a bit easier to get their heads around what it is without kind of going against or kind of exposing the Wizard of Oz, which is the central banks and what they're doing to currencies overall. All I do is look at adoption effects, because I'm not smart enough to figure out what changed better than what and why they want to build on it, et cetera, et cetera. But interestingly, as I've mentioned before, Ethereum is exactly following Bitcoin in 2017 in both price and price structure. Bitcoin is following Bitcoin 2013, which is fascinating, in price structure, but not in price itself. And then so I thought, I bet you Solana is following Ethereum in 2017. If anybody was in that market at that time, Ethereum was the rocket ship that took everybody by surprise. And guess what? It's exact chart fit, and the prices are the same. So Solana is exactly following Ethereum. Ethereum's exactly following Bitcoin. It's like the magic is all in this network adoption, and it kind of all makes sense. The other two that are in that kind of fast growth, fast adoption phase where you see exponential price rises more than anything else is obviously Terra, probably Avalanche, and probably Polkadot. And I think, they will all do well in this cycle. And like Ethereum, they'll all go down a lot later. And then from that, we'll see how it builds out. But it's bizarrely consistent. I never thought this would be the case because you see all the people online. It's like my project. But when you net balance it all out and just apply like adoption effects and do these things look similar, they're almost identical, which is amazing. I'm trying to get my head around this. And I'm thinking that, yes, I will move down the risk curve back to the safer assets where I think there's less volatility. You can use, some yield from stable coins or staking or whatever to lower your volatility. And then you want to be looking to buy the speculative end of the market that's going to get destroyed, whether it's parts of the NFT space or parts of the kind of general token space that gets destroyed in the next bear market, to buy those when they're heavily discounted, but they still have network adoption effects or some perceived value or cash flow. That becomes really interesting because then you can start allocating in the middle of a bear market into the riskier assets to buy them super cheap. And that's typical of credit markets and equity markets. People always do the same. And that's where you get the alpha from, is getting this asset allocation right. And very few people do it because they're still a little bit blinkered to one project. And the idea is you can believe the whole space goes up. You can even have total belief in one project, but it's a long time to get there. So is your allocation weighted correctly for you to reduce the volatility a bit so you can sleep at night in the bad times and get a bit of extra outperformance in the good times?
How do you think about the importance of decentralization from like an investment?
It's risk curve. That's why Bitcoin sits at the top of the risk pile, right? At the bottom of the risk pile, i.e. the foundation asset, because it is the most decentralized. It's not rocket science, and ETH is a little bit different. Okay, that's fine. But once you go further out, they become less decentralized, so they're riskier assets. Doesn't mean they don't play a role. They can't play the role necessarily of being that kind of reserve asset that I've talked about in the past and the pristine collateral, because they do have a risk element which is harder to price, which Bitcoin doesn't have. So again, it's just risk curves for me, and it's more than consistent with, if you want to get a faster chain, you're going to have less, a more centralized chain, and therefore it should be riskier. Get the right point in the risk curve, it'll go up. It also means that generally tend to be lower fees, so you tend to get fast network adoption, so these things can go up a lot.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.